All right. Well, today, this is a new episode of the How to Trade It podcast. And today I'm here live with Bob Iaccino. How are you doing today, Bob?
Good. How are you, Casey?
I'm great. I'm really great because I get to spend Friday morning talking to you. Thanks so much for being on the show.
Very welcome.
So, one of the things I like to start out with in the show is to get a little bit of background on everybody because for me, stories really help inspire, they help motivate, they help push people and get people to say, well, if he can do it, then I can do it. And I know that if I can do it, then anybody can do it. And I think you're a pretty extraordinary guy, but I'd love to hear a little bit about your story.
Yeah, I've been doing this about 28 years now. It's coming up on 28 years. Um, I'm older than I look, which I always like to point out. My I hate this because my family watches The Bachelor and they always use the word journey, but my journey into trading was kind of an odd one. I wasn't looking to get into trading at all. My family had a family business, like a lot of Italian immigrant families tend to do. They're very entrepreneurial. And my family had an Italian bakery and food service company that started off just as a little shop and ended up doing about 4 million in sales before we got out of it. And I was the head of sales when I was 19 in that company. So again, it was my father and one of my uncles. And my father brought in some partners to expand the business, and they ended up throwing my father out of the business. So, as you know, again, Italian loyalty thing, we all just walked out that day, every one of us, even though they tried to. I don't know how people try and convince you to stay when they've just thrown your father out, but whatever. So we left, and a friend, it was the only time in my life I've ever been out of work. It was a 6-week period where I wasn't doing anything. And a friend of mine said to me, why don't you come down to the Chicago Mercantile Exchange with me? I got a job there about 6 months ago. And I thought he meant the merchandise mart. I didn't even know the Chicago Mercantile Exchange existed. I didn't know what it was. So I went down there with him and I saw all the yelling and screaming and all the hand signals and everything. And I was kind of hooked on it. I played sports all my life, and this seemed to me to be the only way that a 5'9" Italian guy could play sports for a living, because it was very animated and a lot of screaming and a lot of fighting. And then afterwards, everybody went out for a beer together, which I thought was pretty cool. So I asked him to sign me on the floor the next day. He did. And I walked around and begged for a job. And the last guy that I asked hired me. And it's kind of a funny story because he said to me, he goes, I'll pay you $500 a month, take it or leave it. And he said, your job is to get me coffee, get me lunch, and look for another job. Those are the 3 things I want you to do every single day. So that's what I did. And about the 2-month period, when everybody kind of seen me around and the guy who originally hired me was ready to cut me, somebody gave me a job. And that's kind of how I got started.
So, your next step when you got from the coffee boy, what was that first job after
I
that?
was a trade checker and a clerk, which actually I still use trading cards. These are actual trading floor trading cards. I had these made from the original printer that made the trading cards on the trading floor, but essentially it's called trade checking. So what that was, when 2 members made a trade, okay, essentially they were written on these cards. I don't know if you can see these, but they say buyer on one side and
Right.
seller on the other.
Okay.
So if a trader was a buyer, he would put the amount of contracts he bought, the month, and who the seller was and the price on these cards. The guy who did the other side of the trade, he would fill out this exact same thing, but on the seller side. These cards would be handed out to the trade checkers. Trade checkers would walk around the outside of the pit and match up the price, quantity, and time of the trade. That's what I did.
Okay. And so you still do that to help you process your trades and just keep an idea of what's going on, or
Well, everybody knows ad nauseum about the idea of a trade log.
right.
And I do keep a trade log, but in the moment, a lot of notes I write are on these cards. Here, I've got one right here with some notes on it from yesterday. So I still use these to kind of keep track of notes and things that I want. They also make a phenomenal grocery store list because they fit in a back pocket or a shirt pocket perfectly, and they're already lined out for the quantity and the amount you want to buy. So I just got used to using these for a lot of things. Traders used to have these in stacks of these in their houses and use them to keep golf scores, everything. Back when I played golf, I hate golf now.
Okay, well, that's some pretty great insight. I've never seen one of those before, so
I will send you some, Casey.
oh, very cool. One of the benefits of being on a podcast is people have been sending me stuff. So,
Happy to do it.
so this is good. So, what exchange was it that you started out in? I know you mentioned. I
The,
just
Ch- the Chicago Mercantile Exchange, which is now the CME Group.
okay.
I got my
And
CME Group water bottle here.
what do they primarily trade at the CME Group?
So CME Group is commodity futures, although their biggest volume is in the index futures. So if anybody out there trades futures, you likely trade the ES, which is the mini Nasdaq. I'm sorry, the mini S&P, or the NQ, which is the mini Nasdaq. And recently, the CME Group came out with these micro contracts, which are just tiny $5 a handle contracts that are very, very popular. Huge volume explosion in those. So you trade the indexes, you trade commodities like gold, silver, you trade things like agricultural commodities, but mostly it's financials, it's interest rates, and it's indexes, and to a certain degree, it's gold and silver. And we're also the first exchange to do a Bitcoin future.
Oh, okay. And I bet that move to uh, add the smaller contracts probably drove a lot of new retail traders, people maybe that had less money to start out with into the markets.
Yeah, absolutely. The structure of the mini S&P contract is it's the index times a certain denominator, and as the index grew, right? I mean, we get the S&P now at about 2,900. It was much lower than that. It was in the teens when they launched that E-mini contract. The margin and the moves became too big for the retail, so now they've introduced a smaller contract, which is a $5 contract versus a $50 contract.
Okay. So I want to jump back a little bit just because to satisfy my own curiosity. What happened to your
Mhm.
family after they lost the business? Because you went into trading. What happened to them?
Yeah, it's funny. My father and my brother and my mother opened a bakery deli out in the suburbs of Chicago, and I actually worked there for about 10 days. But when I got a chance to go down to the Chicago Mercantile Exchange, and it was hard to tell my father this too, by the way, because my father's like, "Why don't you get a real job? What is that?"
Right.
And I said, I want to try this because it got in my blood immediately. And at the risk of sounding patting myself on the back, I took to it very easily. I took to it very quickly. That's not to say that I made money, but I've always been good at basic math, which is what trading at its core is. It's adding and subtracting under about 10,000 psi. So that's what it was at the time with all the commotion and the noise in the pits. Um, so I did that. My father and my brother and my mother started something called Franco's Cucina, which is a bakery deli, something that in Italy is called tavolo caldo, which translates into a hot table. And it's just a bakery, coffee, pastries, sandwiches, and then some hot foods that can be made quickly and easily. My mother's recipe, and they actually were very successful at that as well. My father ended up selling it to my brother, and my brother still runs it to this day.
Oh, cool. Well, I'm glad I asked that.
Yeah.
Good backstory info. So, after you got into the Chicago Mercantile Exchange, what were some of the major challenges and obstacles that you had along the way?
Well, it doesn't apply anymore, but first and foremost, it was learning the hand signals. So there's actually a documentary called Open Outcry. It was done by Nova back in 2001, and you can still find it on YouTube. If you just type in Nova Open Outcry, you'll see about the first 15, 20 minutes of that is me. They just happen to have a camera on me on the trading floor, and you'll see us flashing hand signals like crazy. That was hard. Now, as somebody who spoke Italian before he spoke English, I remember learning English. I mean, I was a kid. I went into kindergarten with an accent, then eventually lost the accent. Um, it was hard to start thinking in English. I used to think in Italian and then translate it. Now I think in English, and when I want to speak in Italian, I have to translate it. Learning to do those hand signals without thinking was an extremely difficult thing. And it's right about that 6 month mark where you get it. And then from there, it was understanding that the core thing for me is the market is correct regardless of what you think. So that was a very hard thing to grasp. I learned that lesson the hard way, which we could talk about if you want. But for me, it was understanding that the market, it doesn't really matter what you think. Okay, the market's going to do what it's going to do. It actually is a sort of living, breathing entity that's composed of basically mob mentality. And it's a situation where You can fight the mob if you want to. One of the smartest traders I ever met was a guy named Neil Grossman, who was constantly right, but he was also constantly early. So he actually would lose money a lot because he was way ahead of the market. And then 2 years later, his thesis would play out. So you just have to understand that the market is right. That was the second hardest thing to learn.
Now, if he was right 2 years later, but was he already out of business by that time because he was just
Pretty
too early?
much, pretty much. He ended up, I mean, he was just a super smart guy, Oxford educated, the whole 9 yards. He would keep me on the phone for a half an hour, 45 minutes. He was in New York telling me his theories, and his theories were always right later.
Right.
And it just took time for the market to catch up to him. So he ran a hedge fund for a while. He was a customer of mine when I was brokering futures. And just, I mean, I'm blessed to have known him, but he ended up out of the hedge fund business and in more of the C-suite, and he's thrived there.
So when you say that you learned your hardest lesson, I asked if I wanted to talk about it. Well, since you said that, yes, I do. Can you tell me about the hard lesson?
Sure. I advanced pretty quickly once I got down there. Again, I took to it very quickly. I went from a trade checker to a clerk to an institutional guy, and I got a job at a place called Nico Securities, covering large institutions. My boss was pretty much a tough guy. They all were back in the day, and he saw that I took to it pretty quickly, and he used to give me a lot of leeway, and he would leave me on the trading floor alone to cover larger clients. So one time in the heat of the moment, I put an order in backwards. Client wanted to sell, and I bought instead. So being, I'm so smart, Casey. When I realized my mistake, I just told the client, don't worry about it. Your order's good. And I said, I'm smart. I'm going to trade this, right? I'm not going to get out of it. Just going to trade it. So at the time, it was about a $1,700 loss. When I finally got out of it, it was over $70,000 in losses. And that was to my boss personally. So you can imagine he was angry with me.
Right.
And I literally went down to the office left the trading floor and went to the office to explain to him what had happened. And he, of course, already knew. And I walked in the office and he goes, just get out, go home. I can't look at you right now. And the lesson from there was basically, you're smart. You're too smart to have done this, to have made this mistake. So I went home and basically, I don't know. I went through a whole bunch of sort of emotional ups and downs about it, and got to the point. Honestly, it was my dog taught me a lesson there, but I don't really want that. We don't need to go into that. But I went back the next day and I told him, look, I understand I don't have a job anymore, and I think you're correct in doing that. Can you just please tell the next person who calls you to say, hey, is Bob a good guy or not? Number one, please tell him I was a good guy. Number two, tell him exactly what happened. And number three, ask him to hire me so I can pay you back. And he basically said, just put your trading jacket on and get down to the trading floor. He goes, you are paying me back, but you're not fired. So that was a huge lesson. And then the second lesson was when I went off and thought I was so smart that I could trade for myself. I lost $90,000 inside of 7 months. So that was a big deal as well. And that actually got me to where I am now.
Okay. Well, I'm just thinking about this for a minute.
It's two major lessons.
I'm trying to take it in. So when your boss didn't fire you, like what was that all about?
Well, I like to say it was a Chicago thing. I don't know why I like to say that. Probably because I'm a native Chicagoan, and I've lived in New York, Los Angeles, and Chicago to me is kind of the sweet spot for me. I went down there and took responsibility. I didn't say this happened, that happened. I said, I effed this up. Okay. And you should fire me. And because of that, he said that to him meant you're not going to do that again. Had I made excuses and stuff, I was gone. I was out the door. And I don't think he would have given me a good recommendation. And I don't think he should have. It was just a matter of saying, look, I thought I was smarter than the market. I thought I was smarter than I am. And there's a humility in that I think I took with me. I hope I've taken with me in every aspect of my life, to where And actually, I have a partner in one of my businesses, and he started off as a student, and he came up to me during a live event that we did, a live in-person event that he actually bought a ticket for. And he said, "I've learned your methods. I think I've improved them." And I didn't know this guy from anyone except that he was a student of mine. And I said, "Okay, let's take one of the breakout sessions and show me what you did." And he did improve it, and he's now my partner. I don't think if I wouldn't have had that lesson, I would have had the humility to say, "Okay, cool. I don't think I know everything."
Yeah.
Because prior to that mistake, I did. And I was only down there about 2.5 years at the time.
Yeah. Well, that's really good. And so, I know in my life, I've learned a lot of hard lessons from good bosses, and I've
Mhm.
learned a lot of hard lessons from really bad bosses too. Because you get
I
the
know you're
good and the
doing the
bad,
interview, but
right?
which ones are better? I know you're doing the interview, but which ones do you think are better?
Oh man, I think the good bosses were better because one of the lessons I learned from a good boss was when I was in the military. I was a young guy, and I did something really stupid,
Mhm.
which young guys do. I was on
Yeah.
a deployment in Kosovo in 1999, and it was really cool because it was a peacekeeping mission, and I
Mhm.
just left the area and I was hanging out with some locals. And I didn't
Mhm.
tell them where we were at. And I went over to their
Mhm.
house and was like drinking coffee, and they were playing the piano for us, and it was just like a blast. But then I came back
Mhm.
and I was like screwed. Like he was like so mad at me because he's like, dude, I was
Mhm.
about ready to call the battalion commander. We were about to have a search party. We were gonna go
Wow.
crazy. And I'm like,
Yeah.
and so then he hammered me pretty hard, but he didn't report me. Like he
Mhm.
gave me a lot of duties. Like I had to do a lot of. He made me look like an idiot. Like my
Mhm.
rifle, I had to tie it to my wrist, keep it with me at all times. And so then people were always asking me, well, what are you doing that for? So I had to look like an idiot. But he
Yeah.
didn't report me,
Mhm.
and it taught me a lot of good lessons.
That's a great story.
Yeah. So, anyways, yeah, we learn as we grow. So the
Mhm.
90,000 that you lost, tell me a little bit about that. You were trading for yourself for
Well,
the first time.
I was, and some of it was my money, some of it was my father's money, and some of it was my well, let's leave it at that. Some of it was my father's money. And yeah, I you hear a lot in the financial media about dollar cost averaging. Well, in the pits of Chicago, we call that adding to a loser. And I added to a loser, basically saying, "I'm right, the market's wrong," and just continue to add and add and add. And the one thing you learn is the market can stay wrong longer than you can stay liquid. And I'm kind of changing a market cliche that everybody's heard before, but I like to use it in that form where I say the market can stay wrong, and the wrong is in air quotes because it's not wrong. I'm wrong. And one of the things that I learned through that, I would say, is that you can make money on a bad trade when you can lose money on a bad trade, and you could make money on a good trade and you could lose money on a good trade. And so just because something is a good trade isn't defined by whether you made money or lost money. A good trade is defined by, was it your setup? Did you place it correctly? And did you stick within the rules that you set for yourself? And if you lose money, but you followed all the guidelines that you've set for yourself based on your research and based on probabilities, still a good trade, even if you lost money. So I no longer say I was wrong when I've lost money on a trade. Losers, I'm stealing this from, again, an old student of mine, a guy whose handle in our class was Mad Palmy. He was an English guy. And he wrote a document one time that basically put this better than I could, where he said losing trades are the complementary probabilities to winning trades. You can't have one without the other. So I started to not welcome losers, but accept them as one of the parts of the probability chain that you follow when you're a trader. When I lost that money, that's not what happened. I dollar cost average into a position that kept going against me. So I don't believe in dollar cost averaging for active investors or for traders. I understand it for someone who's a buy and holder and is someone who runs their shoe store or runs their Italian bakery or runs their software business and just puts money in the market. That person should dollar cost average. but it is not a blanket thing. And I think a lot of times active investors and traders say, well, I'm dollar cost averaging. Are you, or are you not willing to accept that this thing has gone past where you were willing to, the risk you were willing to take? So after I lost that money, I was basically back to square one, where I was walking around looking for a job. And I got hired in a brokerage firm called Nico Securities, and it was analytical at its core. And I worked under a guy named Todd Kobayashi, who kind of taught me some of these lessons. Todd was my first mentor. And the third major lesson I learned was balancing risk and accepting risk as a part, basically as point one, two, and three to your trade. Because I'd lost basically all the money I had to trade with, but I did not want to give up on trading. So I had to come up with a new way of doing it.
So one of the things that I'm just picking up a little bit when you're talking about these hard lessons is every time you were accountable to someone, not just the market. The market is going to do what it's going to do, but you were accountable to someone. When you lost the 90,000, you had to go to your dad. You know, when you lost the 70,000, you had to go to your boss. Do you think? Uh-oh.
We're back.
Okay. Did you knock your camera over?
Hey, I did. I get very animated, so we should be back here in a second.
No, we're
Can
good.
you see me again?
Yeah. No, it's weird. It's like we never missed a beat. It's just like just like on the heat of the moment on the trading floor.
Give
Somebody
me one
knocks you
second,
down.
because I want. Yeah, give me one second. I just want to secure this thing real quick.
Okay.
What you're going to see in the background is two old pictures of the Chicago Board of Trade while I'm doing this.
Okay.
Hold on. All right. We're back.
Awesome.
Sorry about that.
So my question was, as far as the accountability and taking ownership, I think that's a really big lesson that I'm picking up here. As that's not really, I mean, that's a big part of trading. I think when you're alone behind a trading screen and you don't have to actually talk to someone about your losses, I think it could be easy to maybe not take that personal responsibility.
Totally agree. You know, I learned that from my dad, and I've got a story behind that as well, if you want to hear it. But okay, so here I am, a teenager. You know, I'm American now, and 18, 19 years old. I've got a fake ID, and again, we had a family business, so there's no days off in a family business. I started working when I was 14 years old. My older brother started when he was 11. So like we all worked in the business, and that was what we did. Summers, weekends, we worked. So I joke with people all the time when they're like, "You mind working on Saturday?" I'm like, "I'm an immigrant kid. That's what we do." Right. So my father, one day I was supposed to go into work with my dad, and he found me basically still drunk down in one of the bathrooms, doing what you do when you drink too much.
Right.
And he basically said to me, well, sorry you feel bad, but we still have to go to work. So he basically helped me in the car, and he drove me to work, and he made me do one of the worst jobs in the business deliberately. And we had these giant ovens that baked a lot of the breads and pastries and some of the other things that were pre-baked. And those had to be cleaned out once every 3 or 4 months because breadcrumbs and dust would collect in the bottom and could start a fire. So these things ran 7 days a week at 400 degrees, 350 degrees, 475, depending on what was being cooked. So literally the night manager would say, "Hey, the ovens need to be cleaned off. Today I've shut the ovens off." You take these big fans and you basically blow air into them, try and cool them off as much as you can. But they never got really much below 120, 110 degrees. And then you basically would climb up on one of the big shelves, and they would turn it on and feed you down into the bottom, and you'd jump off, and you'd have garbage bags and shovels, and you'd be scooping up all these breadcrumbs and things. Well, he made me, son of a gun. I'm going to get this sorted, Casey. Don't worry.
Oh, no problem. All right, so we're waiting for Bob to fix his his camera. Well, we lost Bob. He might be back or he might not, but that was a pretty good show. If you guys enjoyed talking to Bob, we'll see what happens if he comes back or not. If not, I might come invite him to come back if you guys like that. Just let me know what you guys think. Oh, he is back.
I am back.
He's back.
I'm sorry about that, man.
Oh, so is that all just part of your hand motions?
I know.
It's
I
just
just
the
get all
talking with
animated.
your
I start
hands.
moving, and unbelievable.
Oh.
Anyway, you want me to start that story over?
You
or
know
what? Do you wanna
what?
do?
We can go right where you were at. You were cleaning the breadcrumbs.
Yeah. So I'm cleaning the breadcrumbs, and obviously I'm coming out of the drunk and into the hangover stage, and it's the worst part. And I'm just, I'm sweating and I'm dying in there, and I'm trying not to lose my lunch, so to speak. And my dad just keeps walking by, and with his thick accent, he's like, "Hubby, you okay? You want a beer? I'll go next door and get you a beer." And every time he would say the word beer, I'd be like, "Oh my God, no." So, and then I'm driving home one day, and he's like, "You got to understand that, you know, your decisions, you still have to go to work. You still have to do what you have to do. Those things don't go away just because you self-medicated for a night." And so that's really where the personal responsibility came from. And honestly, it hasn't really failed me ever.
Right.
Just basically walking up and saying, "Look, I mean, I did this. What are we going to do about it?" So it hasn't really ever failed me. And you're right about when you're alone in a room and you're only responsible to yourself. I used to do a lot of public speaking. Hopefully, I can do more of that again someday. But I gave a speech once to about 150 investors and traders, and I brought 150 mirrors with me, hand mirrors, and I handed them out to everybody before I started speaking. And I said, "You need to put this on your desk. Wherever you do the most trading, investing from, you need to put it on your desk, because when something goes wrong, it's not because Jerome Powell said something. It's not because there was a tweet. It's not because you did it. Okay. Everything that's going to happen in the market is going to happen whether you place that trade or not. So you decide how much risk you're going to take, and you know that the parameters of the market are that something might happen. Two planes might fly into a building. Okay. You don't know what's going to happen.
Right.
So if you choose this as a profession or to augment income, the decisions you make, you've made them. So I think it's critical for people to understand that. The amount of time I've seen somebody say, I was doing great until Tepper said that the market was going to, that the market was overvalued,
Right.
which just happened.
Right.
Right. Well, it's not Tepper's fault. He can say whatever he wants. He doesn't know you.
Right. Yeah.
So if you don't take responsibility for the way you've set your trade up, I can't help you.
All right. Well, when I post this podcast episode, it's going to be titled "Personal Responsibility." That's the title of today's message.
I like that.
Yeah, and the thing I really like is that mirror, because you know what? When there were 150 people in the audience, you're really hammering it home. Like that's just an extra message, just saying.
Mine is right here. Like mine's right here.
Yeah.
I've got a mirror just to my right.
Yeah.
So I'm not making something up here. I could show everybody that mirror if they want it.
And it's not for personal vanity only, right?
No, not only. Partially.
Yeah.
Not only.
Okay. Now, very exciting show. Great stories and a little bit of extra action. First time ever. So this is good. I want to talk now first about strategy. What do you primarily trade, and what's your main methods of trading?
Well, we trade everything. I would say we're most active in individual stocks and in commodity futures. So if I had to separate the two by percentage, I would say that if you lump those two as sectors, as categories, it's about 50-50. We do trade some equity futures, but we also trade individual equities. And I say we because I have a partner in our actual trading. We're not a public hedge fund anymore. I used to be at a public hedge fund, but what we do right now is we keep a core portfolio of stocks, and then we actively, very actively trade stock futures and a little bit of cryptocurrencies and commodity futures.
Okay, so what is your main methodology, and how do you determine what you're or how to trade those?
So I'm a price action trader, but my partner, the guy that I told the story about, who improved my methods,
Ah, okay.
he's he's better at it than I am. He's better at price action and technical analysis, although he bounces everything off of me. So what we tend to do is I'll have a fundamental view and I will espouse that fundamental view to him. And he will then go to the charts and he will either veto me or tell me where I can express that opinion in terms of price. So, for example, I'm overall bearish the equity markets. We're long. He has not allowed me to take a bearish position yet. Although I know exactly when it's going to happen. I keep looking to my left because I keep kind of looking at
Okay.
the S&P, which is down as we speak, down about 1%.
Okay.
So again, overall, I'm bearish. It's a fundamental view. It's based on what's going on in the economy and in the markets and in credit. I still have a lot of contacts on the institutional side. I was speaking to a banking contact of mine yesterday. He runs the funding side of a very, very large foreign bank. And he says, I'm trying to be an optimist, but I really can't. And that's a quote from him in a conversation we had yesterday that backs up what I think is likely to happen. So I tell my partner, Mike, this is what I think. And he's like, okay, I'll let you know when you can do it. That's kind of how it goes.
Again, I like that because you've got it's not just all on you. You have
No.
it's a team thing. It's accountability. You get a lot of different viewpoints, and you can
Mm-hmm.
see mistakes that you're missing and mistakes he's missing, and then together you come up with the idea. So that's pretty good. If more people
Yep.
did that, I bet we'd see some more success stories. It's really
It's
good.
really hard to do this stuff on your own, Casey. It really, really is. Um, there's a lot of help out there that you can get, and finding the right help that suits you. I don't disparage anyone. There's some core principles that personally I believe. And if you don't agree with those core principles, then I'm not your guy. But
Like
from a
personal
perspective of,
responsibility.
yeah,
Yeah.
I'm just not your guy. And it
Yeah.
doesn't mean that your guy
Yeah.
is a bad guy. It's just I'm
Right.
not
Yeah.
him or her. And I know a lot of really good traders, and I know a lot of really good analysts, and I don't agree nor trade their methods all the time. So it's a personal thing, and personal responsibility comes with that. So
Well, Bob, I've really enjoyed talking to you, so it's been fun. Can you tell everyone that's listening about some of your business stuff, or how you can
sure,
get in contact with you if you're doing anything
sure.
right now? Because honestly, I don't even know what you're doing, so it's for me too, because I'm just curious.
So I have three main businesses that I work on all day besides our trading. One of them is called Path Trading Partners, which if you see me on TV, I don't think we talked about this, but I still do anywhere from 2 to 3 TV appearances a week. Um, this wall you see over my left is generally, I'm sorry, over my right is generally my background that you'll see on TV now, because obviously we're still locked down in Illinois. So I'll do Bloomberg television via phone. If you have a TD Ameritrade account, you know that they have their own network. I do that oftentimes twice a week. I think the next time I'm on TD Ameritrade is the 22nd
Okay.
of May. I think I'm doing a 7 a.m. then. Um, Path Trading Partners is what you'll see under my name. And it's a boutique analytical firm where basically we do trading analysis in different markets for firms that want their own analysis, but they're too small to hire their own analytical team. They hire us. We do the analysis, they put their name on it, and it goes out to their clients. We also have something called the Pure Exposure Growth Series. Pure Exposure Growth Series is a free online live trading show. Our next episode is, it's Monday, May 18th. I'm the host of it. Again, it's free. It's on YouTube. You could go to pureexposuregrowthseries.com and sign up to get the alerts of when our shows are. That show is sponsored by the CME Group and by E-Trade. which is why we're allowed to do it for free. And I have several market experts and TV personalities that I really respect. Last week we had Kamal Shri Kumar, who's probably the best macroeconomist I know. We had Jimmy Iurio, who you guys would know from CNBC. This week we have Amelia Bordeaux from Compass. What is she from? Compass FX, I believe, is her company. Jay Soloff is going to be on. We've had Serge Berger on, Phil Strabeel, Scott Bauer from Prosper Trading has been on a bunch of times. Scott Shellady, who you would know as the cow guy. That's a free show. And again, it's Pure Exposure with one E. So it's PURE exposure, Pure Exposure Growth Series.
Okay.
Our next live show is Monday. And again, that's completely free. We don't charge any before that. And then I have something called the Stock Think Tank, which is a pay-for product, which is basically an annual membership where I said we do mostly stocks. You get the stocks we do at the time we do it.
Okay. Good stuff. Well, I'll have all the links to those in the show notes. So for people that are listening on the podcast, you guys can go and check all that out, which I highly recommend that you do. Go check out his show, Pure Exposure. It sounds great. I'll tell you that I will be tuned in next time because it sounds really good. And Bob, thank you for being on the show.
Can I throw? I'm sorry, Case. I want to throw one more thing in because we just started it.
You got it.
I'm doing something on YouTube that again is free, and we did our first episode, so it's up on the Pure Exposure Growth Series YouTube channel. It's called Pro versus Pro. And my first two guests were Todd Kobayashi, who's the first mentor that I mentioned.
Okay.
And Jimmy Iurio, who's a director at TJM Institutional Services, also a CNBC guy. And they took either side of the NASDAQ, long and short. So it was really interesting. It's a 10-minute video. Again, it's free.
Is it like a debate or something?
Yeah. I'm not trying to foster fake controversy. It's just
Right.
if I find some of my contacts have differing views, I ask if they'll give their side of it. Okay. And it's very cordial because they're real traders and they respect each other.
Right.
And oftentimes they can both be right because sometimes it's about duration. Like Todd may think the NASDAQ is going down in the next 3 weeks, and Jimmy might think the NASDAQ's going to be higher 6 months from now, but they still have opposing views.
And they might be right, timing, right? So it goes
duration.
Up, and then, yeah.
Yeah, it's about duration and risk. So, but our first one is up on our YouTube channel now. So I just want to mention that because I'm super excited about that one.
And that is the same channel? It's just a different show? Pure Exposure.
Pure Exposure Growth Series, just a 10-minute segment.
Okay, Pro versus Pro. Go check it out. And thank you again, Bob.
Happy to be here, Casey, anytime.
All right, everybody, that's it. Please stay tuned for the next episode, and make sure you guys go to the show and hit a like and a review if you enjoyed this episode. We'd appreciate that, and we'll see you next time on How to Trade It.